All right, what's up, everybody? This is Fair Slim with Trade with Tex. I am feeling a little bit under the weather, but I got a lot of emails about drawing trend lines and whether or not these people were drawing them correctly. Some of my members, some people from social media. So I figured, hey, why not? Let me crank out a free YouTube video for you guys. Okay, but when you're drawing your trend lines correctly, there are a couple of things that you have to note. And the first thing is what time frame you're using it on. Right, because whatever time frame you draw that trend line on, you obviously have to stick to it. So in this case scenario for this webinar, I will be using the daily, aka the 1 year, 1 day. I'm calling it the daily because that's the interval that it goes off of. 1 year, 1 day. I can zoom out here on HLF and you can see the past year of price movement. Okay. Now, another big thing to note is that you need an understanding of trends in order to draw a trend line, right? Who would have thunk it? All right, but when we're talking about trends, all we're talking about here are highs and lows. More specifically, swing highs and swing lows. If you have a hard time annotating them, I do have a little cheap trick to it. I'll show you in a second, but swing highs and swing lows are the turning points on a chart. So if I just draw a very basic line chart here, right, these swing lows are in red, the turning points to the upside, and the swing highs are in green. Okay, so all you're doing when you're drawing a trend line is drawing a line, and this is probably going to be a little bit rough since I'm not using a tool here. All you're doing is drawing a line of best fit to those swing lows in order to find where the support is going to be for the trend continuation. If you're a reversal trader, you're saying this is irrelevant to you. It's not, right? It's not irrelevant. It is 100% relevant because when that trend line breaks down, you have yourself a reversal pattern here. Okay, you have yourself a sell signal. You can short it, buy puts, whatever you want to do, whatever you're trading, and you can pretty much anticipate where it's going to go next. Okay, so HLF is a great example of a nice little setup here that we played in chat recently. It was alerted in the chat room at I think about 70.6-ish, and it just hit our final target today of 78. Right, it made a 10% move in a little bit under 2 weeks, and it's a large cap, so that is a pretty large move. But the stock was very confusing. If you draw up the chart, it's a little bit tough to anticipate where it's going to go, but to me it was very clear, and I'll show you exactly why. Okay, so to draw your trend lines correctly, again, as I mentioned, you do need to connect your swing lows and swing highs, and all you need are 2 points. Right, and when I'm saying points, I mean swing lows and swing highs. So in order to draw that trend line that I was doing just now, right, when I connected those two lines, all I did was I annotated 2 swing lows, and then the rest followed. Right, so you just need 2 points to draw a line. Sounds simple, but again, a lot of people get it confused. I see experienced traders on social media completely misdraw these. Okay, so to get those 2 points, if you're not very good at finding swing highs and lows, this is the cheap trick that I was talking about. It's in a blog post on the website too, on tradewithtex.com, but might as well show it on the screen share here to keep it nice and simple. Okay, so this is the period where we alerted the stock for a breakout, right? More recently here, that was the actual breakout for the trend continuation. Now, in order to find the swing highs and swing lows, the easy way to do it, if you're using a candlestick or bar chart, and again, you shouldn't be using a line chart. If you're using a line chart, God help you, right? You're just going to be all over the place. But if you're using a candlestick or bar chart, to find those swing highs and swing lows, you can just draw a line on the chart. Right, and you might be saying, well, Ferris, you just told us not to use a line chart. Why the hell are you drawing lines here? And again, this is just for simplicity. Right, this is just to dumb it down to the price a little bit. Okay, so swing lows here are the V's that provide an upturn. Right, so right here, that's the first swing low, number 2, numero tres, 4, and 5. Okay, now the swing highs are just on the upper end. So 1, 2, 3, 4, and then, of course, 5 here if it does end up topping at that target. Okay, but again, swing low, swing low, swing low, swing low, swing low, high, 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 high. All right, now, in order to spot this trend line on HLF, you do need to have an understanding of candlesticks too. So, again, we talked about an understanding of trends. That just comes from annotating swing highs and swing lows. And now an understanding of candlesticks. The reason I say that is because when we're looking at a green candlestick, right? And if you understand the basics of candlesticks, you know that this is the opening price, This is the closing price, and that upper shadow, that wick, right, is the high of the range, and this right here is the low of the range. Okay, now when we're looking at this, I'm seeing a lot of trend lines being drawn like this, which does technically work, okay, but if you want to be more specific, you have to draw it to the upper and lower end of the range. Now, that is one way of drawing your trend lines, where you just tap the body of the price of that candlestick instead of the lower and higher end of the range. But if you do that, you need to always do it, right? You can't just do it once or twice for the charts that you want to look like that. Okay, now the way that I'm showing you guys today is along the lower end of that range. All right, now if we look at this HLF price, again, we marked those swing lows here, 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 and here. All right, so in order to get our trend line, all we got to do, click on the trend line tool right here. And again, it's probably different for whatever platform you're using. All right, take it to that lowest point, that lowest swing low. And then all you're going to do is start connecting it to each swing low and see if we have a line of best fit. And again, you need 2 lines, right? And you need to be realistic. Sorry, you need 2 points, and you need to be realistic. So you can see that this has a pretty aggressive upward trajectory that it's probably not going to hold up. So we take it to the next swing low. All right? Right there. And you can see that based off of this chart, right, if we annotate it to that swing low, and notice how we're annotating here, right? We're not intersecting the body of the price, the body of that candlestick. We're just intersecting the shadow, the wick, right, of these swing lows. Right, you can see you just need 2 points, 1 and 2, and then 3 and 4 were nice trend line support bounces for the continuation. Okay, now for me, the signal here is on a breakout. It's not necessarily at support. I'm a trend trader. I do like buying at support. But more importantly, I like to buy when the trend shifts to get a little bit more momentum. So in order to spot the breakout, you do need to connect the swing highs. And actually right here, what we don't have is a trend line, right? We don't have a downward trend line, even though there is a slightly sloped one. What we have is a little resistance zone overhead. Right, so we identified that resistance zone in chat, and once we saw that breakout, we knew that the stock was going to continue because it lifted off of the supporting trend line. And then it broke out. Technically, right, when we have a trend line support and a resistance zone, we have an ascending triangle. Right, that's where it gets its name. Right, that little triangle that closes up there. Okay, and you can see once it broke out right here, we had that very strong follow through in just a few days. Okay, so again, the big note here is how to draw the trend line, not necessarily spot the resistance zone. And it is specifically just by connecting those swing lows. Okay, now, since I am a breakout trader, a lot of the trend lines that I draw aren't supporting trend lines. They're mainly downtrend lines from the highs to see where we're going to get the breakout. Okay, so the other 2 examples I wanted to bring up are ANTH and ZNGA. Okay, so ANTH recently came into play. Let me remove that drawing there. All right, and you can see that based off this daily chart, we had a pretty aggressive downward trend, right? It's a penny stock. I know a lot of you guys trade these. I trade them every once in a while, and they do provide a lot of volatility, right? So ANTH had a really aggressive downward trend, and you can see where the swing highs and swing lows are just by drawing that line chart, but it is pretty obvious, okay? Now, one thing, and this is why I wanted to bring this chart into play here, one thing that a lot of people do incorrectly is they take the highest point on the chart, and that's where they draw their trend line from. Usually, where we're going to draw the trend line from is the highest point on the chart that is a green candle, right? That showed strength that actually held. So the point that we're drawing it from is right there. Okay, I'll say that again. When we're drawing that downtrend line from the highs, we are not using that highest point because 9 times out of 10, if you draw that, look at what's going to happen here. All right, we know that this is obviously that other swing high. If we draw this, you can see that it's a little bit more aggressive, but 9 times out of 10, when we draw it like that, it's just going to give us tons and tons of head fakes, right? If we draw it down from here, it's way too aggressively sloped. That breakout didn't result in any kind of a move. It just flattened out. All right, so you're just going to be sitting there clicking buy, and nothing's happening whatsoever. Okay, so we're taking it from the highest point on the green candlestick here. Click, take it to the next swing high, right there. Notice we are not drawing it down to the body of the candlestick. We are drawing it to the upper shadow. All right, there's your breakout, and there's the follow through. All right, now if we want to load up volume, if we want to load up technical indicators, we can. All right, that just overcomplicates a little bit for, you know, a fairly simple webinar here of how to draw trend lines, but you can see that we cleared that resistance level, that downtrend line resistance, and technically, if we're bringing patterns into it, we got ourselves a falling wedge, right, which is a reversal pattern. So again, you don't need to be a trend trader. You can be a reversal trader and take this long on the downtrend line breakout. Okay, on the falling wedge pattern breakout. So we cleared the 200-day SMA, we cleared the 50-day SMA, we cleared that downtrend line resistance, blue skies, and as you can see, it shot up close to 20% on that breakout. All right, on ANTH. Okay, so again, HLF was a good example of just annotating a lower trend line, or an upward trend line, as some call it, right? And ANTH was a good example of an upper trend line, also known as a downtrend line. And the big note for this one, use the highest point of that green candle, not this one, because then you're just going to have a really aggressively sloped trend line that doesn't give you any kind of buy signal. Okay, and that does really happen with a lot of these pennies. When they spike up, you have such an aggressively downward sloped trend line that you have no way to actually anticipate where it's going to break out next. Okay, now the last chart that I wanted to look at is ZNGA. All right, and this one's a great example of just using a larger time frame if you can't get a good picture here. Right, so if you look at ZNGA, and I'm not going to draw the line chart for the entire thing, but you can see that we've had swing lows all the way up. Right, and the thing has been all over the place. Right, and let's say that I'm a short seller. I'm looking for this trend to break down. I'm bearish on ZNGA based off of fundamentals, so I'm just waiting and waiting and waiting, and I want to see where it's going to break down. Right, if you're looking at the trend line, it's a little bit tough to spot just connecting the swing lows. Right, it's a little bit tough to spot. So what I like to do, and this is a tip that I give all of my members, is I take it out from whatever time frame I'm looking at. Right, let's say I'm looking at the hourly, I'll take it out to the daily. If I'm looking at the daily, I'll take it out to the weekly. So in this case scenario, again, we're using the 1 year, 1 day time frame. Right, I'll take it out to the next one, which is the 3 year, 1 week. That's at least what I use. It's based off of preference, right? To get a better picture of the trend. So let me remove this trend line, take it out to the 3 year, 1 week, and I'm going to remove all the studies to keep it nice and simple. And you can see we have a much clearer picture of where that trend line support is, right? Of where those swing lows and swing highs are, right? So if we draw this trend line, or this line chart to it, all the way up, right? We get a pretty good picture of where that supporting trend line is going to be. All we got to do is take that lowest swing low, connect the lower shadows, and there you go. You have yourself a trend line. Okay, and you're probably noticing that this stock slowly trended and slowly consolidated within the same range, right? So if we draw an upper trend line to it, and we can do that with the trend line tool or the trend channel tool. I'm going to use the trend channel tool just to show you that it's almost parallel here. Right, by connecting those upper shadows, once again, using that first swing high and that first swing low, right, you can see that we have a trend channel. And when that cracks, it's going to result in a pretty big sell-off. Already, the stock is down about, 6 to 8% on that breakdown. Okay, and you can see that it broke down because notice that we have these lower shadows off the support. Right, that shows demand. That shows that buyers are waiting at that support level and sending it back up. So since that candlestick showed the body closing below the support, again, to zoom in here, right, that's the support, and the red candlestick looks like this. Since the closing price right here is below that support, that is confirmation that it's going to keep dropping. And that's when it follows through to the downside. Right, so again, we looked at a couple of charts here. HLF, you can see if we take it out to the daily, which is the time frame that we used it on, it bounced off that support another time, so a third and fourth, right, before just rocketing up. Okay, ANTH only got rejected at that resistance once, and it ended up forming a nice little falling wedge pattern here for a big momentum breakout. Again, that's a lower priced play, so you're likely to get more momentum there anyways. Okay, and then last but not least, ZNGA, if you're looking for a breakdown or even a trend continuation, and you're having trouble reading the daily or whatever time frame it is, take it out to the next larger time frame. Okay, and you can see this very easily just based off of swing lows, where that supporting trend line is, and if you have an eye, you could spot that upper trend line too, giving you a target of where you should be trading it to. So technically from where we drew this, right, this was the first swing low that we drew it from. Right, well, technically that level, but first swing low, second one, we just need those two swing lows to plot it. We draw that trend line up, and you could see that we had one trade after that from here to here with the trend, two trades from here to here with the trend, three, this one fell a little bit short, and then a breakdown. Okay, so many setups here on ZNGA just using a trend line. And a lot of you guys are probably using technical indicators. You're probably factoring in volume action too. But this is just keeping it as simple as possible based off of price. All right, so a quick reminder, guys, we went over just how to draw trend lines based off the lower shadows. One way, and I'll probably just dive into this in another webinar, that you could draw it a little bit differently, right, is by intersecting, well, barely touching the bodies of these candles to see where the supply and demand zones are, right? So you can see that resistance and supporting zones usually are defined by the bodies of the candlesticks, not just the shadows. So you can see that buyers are stepping in below that trend line there. Now it's a little bit riskier, but you will get a faster signal if you connect it from that lower shadow to those bodies of these candlesticks in order to see where buyers are going to step in and where buying pressure is going to dry up. Okay, so once that cracks, you get the sell signal and a much faster sell signal here. Again, it is a little bit riskier since you're not getting confirmation. That's why I just went over the simpler way of connecting the lower shadows of candlesticks to draw your trend lines. Okay, so if you guys got any questions, you can contact me on the Trade with Text site. So that's tradewithtext.com. That's the chat room that I run. Or you can just leave one on this YouTube video. Okay, but hope you guys enjoyed the video. Again, if you have any questions, leave them below. But make sure to like and subscribe to the channel as well. All right, so thank you so much, guys. Have a good night. Take it easy.